Good afternoon. Welcome to Markets Today, where it's all about fixed income, equities, currencies, commodities, and derivatives, of course. We have a lot lined up. We are tracking a number of events, both domestically and externally. Of course, externally, some of the key events is happening around Hong Kong protests. We've seen Cathay Pacific share price take a tank on a number of advisories. Of course, Hong Kong International Airport cancelling a number of flights yesterday, and we've seen that translating it today. We're going to track that and translate what that means for global asset prices. We're also tracking the global trade wars that continues to persist between the US and China and what this means for global asset prices. Talking about global asset prices, we've also been tracking Argentina, where the stock market continues to take a tank. On the news that opposition candidate Fernandez and, of course, her running mate, the former First Lady Cristina Fernandez, have won a primary. And this, of course, this is not good news. The market, the Argentinian market, obviously, doesn't like the new candidates. And Mauricio Macri, of course, likely to struggle in the October elections. But that will continue to track what that means for global asset prices. We've seen Argentinian asset prices tanking, of course, the Argentinian currency, the Argentinian peso, yesterday coming off against the dollar, losing about 30% against the US dollar. Well, for Argentina, the question is, should they actually dollarize? That's a big question for Argentina. We'll discuss that as more. But even coming back domestically, a number of events, obviously, number one is last week, Friday, the Business Daily reporting that the Treasury Cabinet Secretary had ordered all prostators to actually wire back excess cash or idle cash to the central bank. The broader discussion here being that the Treasury single account, should it be extended to parastatals? And my co-host here, Mbide, has some interesting view on that. Treasury single account.
I was actually just listening to your overview of global events, and
Yes.
if I may, I just also wanted to just throw in what's happening in Africa. I mean, there's certainly a lot that's happening globally, and I think off the back of the trade wars, there's been a weakness on oil prices. I think it touched 58.69 earlier. I mean,
Yes.
late last week, early yesterday, and we're seeing a bit of weakness on currencies. So this has been negative for Nigeria. The Naira has touched a low of 364 against the dollar. So it looks like there are no inflows that are coming in hard currency, and there are concerns because oil is the net contributor to hard currency in the country. But then conversely, in Kenya, the last trade that we have seen was at 103. So the currency is actually strengthening here. And with the oil weakening, it's certainly positive for us. And then the final story on currency, George, is Uganda. A bit of weakening last week, but today it's stable. I think the market there is waiting for the benchmark decision by the central bank on Thursday.
Committees announcing that the policy is
on Thursday. So a lot happening globally in terms of weaknesses and geopolitical risks. But then in Africa, I think the concern this week and the focus this week is certainly central bank decisions and the impact of oil on currencies and investor sentiment with regards to potential dollar inflows or outflows on the back of this.
I think even in South Africa, we've seen the South African rand coming under pressure yesterday, today.
Certainly.
On the back of global news, but it's not all bad news.
It's not all bad news.
Some good news that Rwanda was upgraded.
Yes.
So the credit rating, sovereign credit rating for Rwanda was upgraded by
Fitch. Was it Fitch or Moody's?
Yes. But I know that they upgraded them from B plus to B plus from B plus.
Yes, that's what happened. I think that I saw that over the weekend. But it looks like what Rwanda is doing is certainly gaining momentum. Now the question is, are investors making money there? Because it seems that there's more traction for the stocks that are cross-listed in Nairobi as opposed to the activity going on in Rwanda. But certainly the fact that they're very focused and they're very diligent with regards to their politics and how that integrates to the economy is positive for them.
We can discuss that at length.
Of course.
For another day.
But you had asked me a question, and I apologize for just overriding it. I was very excited by
your tone.
Let's
get back to TSA.
TSA.
Treasury single account. Obviously, the directive from the Treasury, the acting Treasury Cabinet Secretary. That all parastatals should. I think the main concern here for them is the arbitrage, for instance, parastatals warehousing money with the commercial banks. Essentially, the same money that is being warehoused from parastatals to commercial banks finds its way into the treasury
into treasury.
market.
So it needs
It's
to get
arbitrage.
back. That's
And
very
they don't
true.
like that.
So is it that they're trying to implement it? I mean, the question is, it is there, and it is a policy that has been passed out, not only in Kenya, actually across Africa, largely driven by IMF. But the question is, how do you actually make it happen? How do you get the money sitting in these parastatals and compel them to take it back to the central bank, especially because they tend to hold on to this money for liquidity purposes. So will you be able to walk back into central bank and say, okay, I need my money tomorrow for a payment? Will they release it?
I think for project purposes, they can be allowed to have commercial banking relationships.
I agree.
Maybe for recurrent, they could centralize it. But let's see how this happens.
Let's see how this happens.
Whether it's going to affect the banking system liquidity when the treasury withdraws this liquidity from the system. But some other news you're also following is you've been tracking the FX market. You think that some stability likely to continue,
stability
or some global events could actually affect it?
No, I think anything that's happening globally today, I tend to focus on the price of oil. So as long as the price of oil is going on, is coming under weakness based on what's happening with currency wars and the trade wars between the US and China, that's certainly positive for our current account deficit. So we tend to release less dollars for oil if the price becomes weaker. So that's a positive for us. But in terms of currency, I think you and I have been at the concurrence of saying 102 to 103. That's something that we see could continue towards the end of the year. And I think the other triggers to look out for is what happens on the D-Day for demonetization, which is in about 1.5 months.
Okay, that's still a long way
That's
to
still
go.
a long way to go.
1.5 months is a long way to go. But something else you're following is the corporate actions.
Oh yes,
KCB releasing Q2 results on Thursday.
Let's see.
Any expectations?
Let's see. Now I want to see how you're going to delve into the second quarter, because I've noticed you've been very articulate in just differentiating
Q2. Yes.
So we've seen Q2 weakness with Stanbic, Q2 weakness
with
with Equity Bank.
Yeah.
Very interesting to see Q2. I mean, what the Q2 performance for KCB is on Thursday, over and above a first half. And also, I'm very keen to actually hear the sentiment with regards to who are they lending to, because Stanbic did say they're seeing demand for lending from manufacturing and for short-term basis overdraft for the SMEs. So manufacturing is more capex, which tells me that there's a positive outlook to the economy. So I'm certainly keen to see what KCB says, who's lending, where's the demand coming from, and as usual, what is the upside with regards to the rate cap conversation.
It's certainly a series of corporate actions in the next 2 weeks. We have also Barclays and Cooperative Bank releasing their Q2 results next week, and keep you updated on that, as well as what that means for the stock market, which is now on a 10-year low. 10-year low.
Could, if you're starting afresh, it could be. It's at about 11 times PE. It's normally at about 13 times PE as a market. But I want to hear our guest today and hear what she has to say.
Yeah, we have with us Sarah Wang, who's the head of research at AIB Capital, taking us through markets review, both equities and fixed income. Something very interesting, that fixed income has continued to be a net recipient of the outflow from equity market, and we've seen interest rates coming down a bit, bond market valuations a bit fat. We're seeing more valuations above 100 shillings, and we'll discuss more of that with Sarah Wanga to tell us where portfolios are, fixed income portfolios are. But we're just wondering whether this bond market rally is temporary or it can sustain, because on the back of that, we've discussed this for some time, it's on the back of the bond market rally is liquidity.
So what should you do on equities? Should you keep putting money in? Who's putting money in and who's taking money out? I'm more interested in that, actually. Alongside the more
appropriate strategy is let's short more stocks.
Let's short more stocks. Fair enough. See what happens.
We have a short break at commodity prices. When we come back, we talk to Sarah Wanga, who's the head of research at AIB Capital. See you shortly.